Hey folks, thanks so much for pushing the play button. I'm sitting here today with Timeka Clark, one of my preferred lenders, and we were talking about some of the most common questions that we hear from our clients. And one common question I hear, which she hears all the time too, is what is a qualifying score for a mortgage? So Timeka, can you please elaborate on what that is?
All right. So the qualifying credit score, there are a few different qualifying credit scores. So we're going to start first with FHA. With FHA, minimum FICO score needed is 580 with a minimum down payment of 3.5% of the purchase price. Now you can go a little bit lower, which will require a higher down payment. And so you can go up as low as probably, I think it's 500, but that down payment will be a little bit low, much higher. And for conventional, minimum FICO score needed is 620. Now, conventional, they're risk-based. So the higher the credit score, the better your interest rate and the better your mortgage insurance premium if you're putting less than 20% down. So we want to shoot for a little bit higher credit scores on conventional, only because if you're looking for mortgage insurance premium pricing and if you're looking for a better interest rate, you want to go a little bit higher on credit scores. VA, minimum FICO score needed is 500. VA is very awesome because, and once again, we thank you for your services as a veteran. But for VA, they don't look at really credits. They look at credit scores, but they don't look at like debt to income. So what they do is the only thing about VA is no lates in the last 12 months. So you really want to, as long as you have no lates in the last 12 months and you're eligible for VA, we run it through the desktop underwriter for VA and to determine for qualification. So those are the items for FHA, conventional, and VA for credit scores.
It sounds like to me the bottom line is if you want to find out if you qualify, you need to speak with a professional.
We can do a home buyer assessment, which means we can look at your credit scores to see what you qualify. We can look at your credit, your income, and your assets to determine qualification. We also can do a soft credit to not pull a hard credit. And a soft credit means that we'll pull one bureau, which is for our company, we'll use Experian. It will be a mortgage rating credit score, but that will allow us to review your credit, your income, your assets to determine qualification on a home buyer assessment.
Okay, very good.